Hey everyone, and welcome. Today, we're diving into a really important financial opportunity for any business that's paid those IEEPA tariffs. If you've got cash tied up in those claims, well, you are definitely in the right place. So let's get right to it. Here's the deal. The Supreme Court has ruled in your favor on these tariffs. And that's fantastic news, right? But here's the catch. While your refund is technically approved, the actual cash, it's nowhere in sight. It's basically trapped in government limbo. And how long are we talking about? Well, the experts are estimating a wait time of anywhere from 2 to 5 years to get your money back through the normal channels. That is a long time for your working capital to be just sitting on the sidelines. And this brings us to what we're calling the billion-dollar waiting game. You see, when the Supreme Court struck down the tariffs, they were very careful not to say anything about how the refunds should be processed. And that silence has created this huge bottleneck, this massive, uncertain delay for businesses just like yours. You know, the best way to think about it is like this. You've got a winning lottery ticket in your hand. You know it's a winner, but when you go to cash it, they tell you, come back in a few years. The money is yours, it's on the books, but you can't touch it. You can't use it. And that creates a real liquidity problem, stopping you from putting that capital back into your business, for hiring, for R&D, for growth, all the things you need it for. But what if you didn't have to wait? Now, this is where things get really interesting. A whole financial market has popped up to solve this exact problem. There are now real, established ways to unlock that trapped capital and get cash into your bank account in a matter of weeks, not years. It's all about converting what is basically an uncertain, long-term IOU from the government into cold, hard, immediate cash. There's a whole market of sophisticated financial firms and investors who are ready to either buy your claim from you or lend you money against it. What they're really doing is taking on that timing risk so you don't have to. All right, let's break down the first and, honestly, the most popular option, just selling your claim. It's pretty straightforward. You're basically selling your right to that future refund to an investor. And in exchange, you get a big chunk of that money, at a discount of course, paid to you upfront in one lump sum. Now, the most important term you need to note here is non-recourse. This is absolutely critical. It means that once you sell that claim, all the risk moves to the buyer. If the government drags its feet for 10 years or pays less than expected, or worst case, doesn't pay at all, that is the buyer's problem, not yours. You get to keep the cash no matter what. And don't think this is some long, complicated process. It's not. The whole thing is designed to be incredibly efficient, usually taking just 4 to 6 weeks from start to finish. It all kicks off with a quick call and signing an NDA. You share your customs data, you agree on the price, the buyer does their homework, their due diligence, and then boom. You sign the final papers, and the money hits your account. Okay, here's a small but important detail about how this is structured. Legally, you can't just transfer these claims to someone else, so the deal is set up as what's called a participation agreement. It just means your company's name stays on all the official court documents as the claimant, but the buyer takes over completely, managing the whole process from then on. So, what's the other option? Well, instead of selling, you can use your claim as collateral for a loan. This path is really for businesses with very large claims. We're talking upwards of $20 million who'd rather take on some debt instead of selling the asset itself. The terms for these loans are pretty specific. First, like I said, your claim has to be at least $20 million. If it is, you can usually borrow 50% or even more of its value. But, and this is a big but, unlike selling, this is a recourse loan. That means you are on the hook to pay it back. Interest rates are typically in the low to mid-teens, and they're paid as what's called PIK. So, what on earth is PIK interest? It's actually a great feature if you want to protect your cash flow. PIK stands for payment in kind. All it means is that instead of you cutting a check for interest every month, that interest just gets added onto the total loan balance. You don't pay a single dollar out of pocket until the very end when the government finally sends that big refund check. So let's just quickly put these two side by side. When you sell, it's non-recourse. You get cash now and you hand off all the risk. And it works for pretty much any claim size. When you use it as collateral, it's recourse. You keep the risk, but you get a loan. And it's really best for those massive $20 million plus claims. They're two very powerful tools, but for very different situations. Okay, so this brings us to the multi-million-dollar question that every CFO wants to know. If I do decide to sell this thing, what is it actually worth? What kind of payout can I realistically expect to get today? The answer? A whole lot more than it used to be. I mean, just look at this chart.
Before the Supreme Court made its ruling, there was so much uncertainty that these claims were only selling for about 22 cents on the dollar. But after the court's decision took a huge amount of risk off the table, the value shot up. Today, these claims are trading for anywhere between 45 and 72% of their face value. That is a game-changing increase.
So, where you land in that 45 to 72% range, that depends on a few things. A buyer is going to look at the size of your claim. Bigger is often better for pricing. They'll look at how clean and organized your paperwork is. They'll assess the legal strength of your specific case. And of course, they'll look at the overall financial health of your company. All right, we've covered a lot. So, with all of this on the table, how do you actually make the final call for your business? Well, it really all boils down to one simple but really important strategic choice. Here's the core trade-off. You can monetize the claim, which gets you immediate cash you can put to work right now and gives you total certainty on your balance sheet. Or you can wait an unknown number of years for what might be a larger payout, but one that still has risk attached to it, at least in terms of timing. And that really is the final, crucial question you have to ask yourself. Is the absolute certainty of having cash in the bank today worth more to your business than the possibility of getting the full amount sometime in the next 2 to 5 years? How you answer that question will tell you exactly what you need to do next.